Welcome to this explainer. Today, we're going to explore a massive, kind of hidden lever in corporate finance that literally shapes our everyday lives and the environment. When we think about global sustainability, we usually picture solar panels, electric cars, or massive wind farms, right? But today, we're looking at the invisible architecture that actually makes all of those things possible. It's this underlying network of capital and risk management operating totally behind the scenes, dictating what gets built, what gets funded, and ultimately how we navigate our daily choices.
So, what if your insurance policy could save the planet? What's really fascinating about that question is how it forces us to completely rethink an industry that, let's be honest, we usually just associate with disasters and tedious paperwork. We tend to view insurance as a necessary evil, something you buy just in case the absolute worst happens. But the reality? The way risk is priced fundamentally alters how individuals and huge corporations behave on a global scale. Let's dive right into this massive paradigm shift. Okay, so traditionally, insurance has been completely reactive. An event happens, a claim is filed, the company pays out. Simple, right? But that whole model is shifting. Instead of just sitting around waiting for a building to flood or a driver to crash, modern insurers are structuring their products to proactively incentivize responsible behavior right up front. It's all about actively preventing those claims from happening in the first place. Section 1. More than paying claims. To really understand how this works globally and how it's actually being tracked, we have to look at the official financial blueprint guiding these multinational companies. And this brings us to our source material for today. The SASB Sustainability Accounting Standard for the insurance sector. Now, SASB standards basically help businesses identify, manage, and report on sustainability topics that actually impact their finances. This specific document outlines exactly how the insurance industry measures and reports its sustainability efforts to investors. It gives us a really cool under-the-hood look at how the entire concept of risk is evolving. Check out this direct quote from the standard. It says, "The industry is in a unique position to generate positive social and environmental externalities." Now, if you need a quick refresher, an externality is really just an indirect consequence of a commercial activity. So the absolute crucial takeaway here is that by advancing new technologies and policies, the insurance sector isn't just protecting assets anymore. Its daily business operations are actively driving a greener, much healthier world. Section 2. Ensuring the green transition. Let's zoom out to the macro level and see how this actually underwrites the future of our environment. This specific SASB metric is honestly like a secret passcode that unlocks massive environmental shifts. It requires insurers to quantitatively track the net premiums written for policies related to energy efficiency and low-carbon technology. Basically, investors want to know exactly how much capital these insurers are putting on the line to back green initiatives. So, what exactly falls under this umbrella? Well, the standard explicitly lists a few key areas. We're talking about renewable energy insurance, which protects vital wind and solar infrastructure from natural hazards or mechanical breakdowns. We're also talking about carbon capture and storage insurance. By underwriting these incredibly specific sustainability-focused projects, insurers are providing the ultimate safety net for the renewable energy industry. And believe me, that safety net is everything to investors. Without that guaranteed protection, lenders simply wouldn't finance these massive, multi-million-dollar green projects. It is literally the catalyst they need to secure loans, attract long-term capital, and actually get built. Let's zoom in on a really fascinating example from the standard that you might not have even heard of: energy savings warranties. Imagine a company wants to retrofit an entire skyscraper to make it super energy efficient, but they're terrified the upgrades won't actually deliver the promised savings. Well, enter the insurer. They offer a policy that literally guarantees those energy savings. If the retrofitting fails to save the expected amount of energy, the insurance covers the financial shortfall. This brilliantly removes the hesitation, paving the way for massive green infrastructure projects. A real game changer. Section 3. Rewarding your responsible choices. Now, let's bring this all the way down from those massive skyscrapers to the micro level, and look at how this directly affects you and your daily choices. Under that exact same section on responsible behavior, companies must also report on the second crucial metric. It requires a detailed discussion of products or product features that incentivize health, safety, or environmentally responsible actions. In plain English, insurers have to explain to investors exactly how they're using policy clauses and pricing structures to actively encourage you, the consumer, to make better choices. And here is what that actually looks like in practice. The standard highlights several traditional products that are being modified to drive real change. For instance,
If you build a green building or improve your home's resource efficiency, boom, you get a premium discount. Decide to buy a low-emission, hybrid, or alternative fuel vehicle, your premiums get actuarially adjusted downward. Even something as simple as driving safer or just using your car less gets rewarded. Your personal choices are shifting global financial risk, and insurers are saying thank you with direct premium discounts.
But wait, it goes way beyond just the environment. Life and casualty insurers are using these exact same mechanisms to promote human health. They offer premium discounts for lifestyle choices like maintaining a healthy diet, doing routine exercise, losing weight, or even giving up smoking and drinking. By tying your health habits directly to financial incentives, the insurance industry is creating these immensely positive social externalities. They win because there are fewer medical or life insurance payouts, and society wins by having a healthier population. It's a total win-win.
Section 4. Measuring positive externalities. But how do we actually know these proactive policies are working to change human behavior on a large scale? Well, the SASB standard doesn't just ask for vague promises. It provides highly specific, quantitative steps insurers can use to prove their impact. Step 1 is simple. Just count the sheer number of policies that incorporate these incentive clauses. Step 2, track the actual dollar amount of premiums generated from those specialized products. And step 3 is where it gets incredibly granular. They aren't just looking at the money. They are diving deep into how human habits are shifting in real time.
What's truly amazing here is that the standard suggests insurers track tangible, real-world outcomes associated with these policies. We're talking about measuring things like the reduction in car accidents involving policyholders. Or for those health incentives, the average amount of exercise hours per week, or even the average amount of weight lost by a policyholder. I mean, think about that. Your extra hour at the gym, or your decision to take the train instead of driving, could literally become an aggregated data point for corporate sustainability reporting. Mind-blowing, right?
Section 5. The future of risk. Let's take a step back and look at what all of this means for the future of the insurance industry as a whole.
This quote summarizes their entire strategy brilliantly. By integrating ESG, environmental, social, and governance factors into the very fabric of their policies, insurers aren't just doing it to be nice. They are highly calculated risk managers. By encouraging you to drive safely, stay healthy, and build green, they are strategically mitigating their overall underwriting portfolio risk. Put simply, making the world safer and healthier actively reduces their insurance payouts over the long term. Good planetary stewardship is, quite literally, just good business.
I want to leave you with a provocative thought to consider. We've seen how standards from organizations like SASB are turning the insurance industry into an incredibly powerful engine for green tech and healthy living. The invisible hand of insurance is shaping your world right now, quietly nudging society towards sustainability. So knowing that your risks are being calculated and that your responsible choices are being financially rewarded on a global scale, what might you change today? Thanks for joining me on this explainer, and I'll catch you next time.